UTI Multi-Asset Allocation Fund. No single asset class remains a top performer consistently over a period of time. As the year's top performing asset class changes with equities, fixed income, gold taking turns in the spotlight. So, as an investor, you may get confused on which asset class to invest. Well, diversification is the key to navigate the ever-changing landscape of top-performing asset classes, and you need to invest in a multi-asset allocation fund, also known as an all-weather fund, as it spreads investments across different asset classes to avoid dependence on a single asset class, with an aim to provide stability with potential of balanced returns, regardless of market conditions. Now, the question arises, is an asset allocation strategy better than investing in a single asset class? To answer this, let's explore the performance of individual asset classes over the past 2 decades. 3 different portfolios with allocations to equity, fixed income, and gold in various proportions reveal a key takeaway. As we can clearly see, an optimal blend of these 3 components tends to yield portfolio returns like equity, but with reduced volatility, as demonstrated by our combination portfolios. The rationale behind using different asset classes rides on the fact that each asset class behaves differently during various economic phases. Over the last 2 decades, we can see a disparity, that is weak or negative correlation in the performance of these asset classes in India during Global Financial Crisis, Mid-2000 Bull Run, COVID-19 induced fall in 2020, and the post-correction recovery. So, the next question arises, how to have an optimal combination of asset classes? The do-it-yourself DIY method has its own challenges, such as how much to allocate to each asset class, which securities to buy, and when to review and rebalance. Also, investor behavioral or emotional biases often influence decision-making, and constant market tracking demands rigorous research. Additionally, frequent readjustments incur tax implications, impacting overall portfolio returns. So, to deal with all these challenges and to navigate through different market conditions, we need an all-weather fund. Here is where the UTI Multi-Asset Allocation Fund helps you. It's a 3-in-1 solution, which invests in equity, fixed income, and gold using a disciplined investment approach guided by a proprietary asset allocation model. Think of these 3 asset classes, equity, fixed income, and gold, like different tools in the portfolio of UTI Multi-Asset Allocation Fund. Let's understand equity tool. This asset class helps to create long-term wealth. It can give potentially high returns, but it might be volatile in the short term, whereas fixed income acts as a steady income generator, providing regular money with lower volatility. And gold acts as a safe haven asset class during period of uncertainty. So you see, each asset has a unique role in UTI Multi-Asset Allocation Fund toolbox. With an understanding of the benefits of diversification, the focus shifts to optimal investment allocation. And for this, UTI Multi-Asset Allocation Fund has a proprietary financial model, which helps in dynamic market direction valuation, evidence-based predictive allocation, guided allocation without biases, and eliminates the need of manual market timing. The proprietary financial model will decide on allocation to equities, fixed income, and the balance to gold. Now let's break down how the fund decides equity allocation. The model uses valuation and yield metrics. Valuation metrics such as PE and PB are like a barometer for the equity market. If it drops below average, indicating the market is on a sale, the model suggests considering increased equity allocation, and if it rises above average, signaling an expensive market. the model advises reducing equity allocation. Now, let's understand yield metrics. As a general principle, we always wish to get the best returns for the price we are paying. It's the same with our investments. The higher the returns, the better the deal. One such indicator of return of investment is dividend yield. Another is the yield gap, which looks at the difference between the return potential of equity and fixed income. When the gap between equity returns and fixed income returns is low, we must reduce allocation to equities and vice versa. Next, let's break down how the UTI Multi-Asset Allocation Fund decides how much to invest in gold. The fund uses a gold to equity ratio. This ratio looks at the price of gold compared to the price of equities, just like the seesaw. If this ratio, price of gold to price of equity, falls below its long-term average level, the model suggests it's a good time to invest more in gold and vice versa. Balancing the trio, the fund predominantly invests in equities 40 to 80%. With gold and fixed income each in the range of 10 to 25%. It's just like a well-balanced meal, equities as the main course and gold and fixed income as sides, ensuring a bit of everything and keeping the portfolio in balance. Now, once we have decided the asset allocation, the next step is to assign securities within each asset class. Investment strategy for equity portfolio. Integrated investing combines fundamental research with market signals. Net long equity allocation will range between 40 to 80%. The strategy invests across the market cap spectrum. Stock selection based on market signals. Dynamic management across the factors based on risk-reward. Investment strategy for fixed income portfolio. 10 to 25% of the portfolio will be in debt and money market instruments. Focus will be on the quality and liquidity of the portfolio. Investments predominantly in sovereign AAA equivalent rated issuers. Portfolio duration basis interest rate scenario and outlook. And the investment in gold goes to gold ETF. UTI Multi-Asset Allocation Fund can be the 3-in-1 solution that your portfolio needs for asset allocation. Let's do a quick recap. You should invest in the UTI Multi-Asset Allocation Fund because it provides single route access to a diversified portfolio across equity, fixed income, and gold. The fund follows a disciplined and valuation-driven asset allocation strategy based on a proprietary financial model to help overcome investors' emotions of fear and greed. With dynamic asset allocation and periodic review and rebalancing, the fund focuses on generating better risk-adjusted returns by reducing portfolio volatility. It's a tax-efficient way of portfolio diversification and equity taxation. UTI Multi-Asset Allocation Fund is a single fund investing in equities, fixed incomes, and gold. Dynamic Asset Allocation Fund based on proprietary model. Tax efficient. To know more, contact your mutual fund distributor or registered investment advisor or call 8655019940.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.